Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, October 23rd, 2006. Let's go ahead and take a look at the markets. They just closed. I've got the S&P 500 on the screen right now, looking at the SPY, the S&P 500 depository shares, and another great day for the markets. Markets were up across the board, and the market continues to be more extended. And again, that's never a reason to sell a market just because it's overextended according to some technical indicators or whatever it is. Price is the only thing that pays us, and it's been holding very nicely along this rising 10-day moving average. The 10 is above the 20, is above the 50, is above the 100 and the 200. They're all rising. So we continue to give the benefit of the doubt to the buyers in the S&P 500. And looking at a 10-minute time frame, on Friday we saw the market get some strength in the afternoon as it made a push past that recent resistance in there. And today we started out a little bit lower, but the market quickly pushed higher, back above those levels, and ran nicely higher into the close even. And I think a lot of that is probably, well, maybe not a lot of it, but some of it is due to the fact that Google continues to rally, and both in the S&P 500 and in Google, and a lot of these uptrending stocks like Apple as well, we're seeing the shorts just get buried in there. And it really is a momentum-driven market now, not only the upside, but to the downside. Look at SanDisk again today, continuing to add to those losses. So people want in the good stocks, and they're willing to just throw away the stocks that are in downtrends. Now, the one group that I've been focusing on as far as giving me reason for concern about the overall market is the semiconductors. They were up a little bit today, but they did close. Well, let's take a look at that. I'm not sure if they did close above or below that 50-day moving average. It's not really that significant, but they closed at 33.85. 50-day moving average is rising, and it's at 33.82. So we got back above that 50-day moving average, and that's a short-term psychological boost. But when we look at the 10-minute time frame, we can see that now the market's starting to find a little bit of traction in here. Not necessarily that it's making higher highs and higher lows yet, but it is. We are seeing signs of these moving averages crisscross, and that represents indecision, which typically comes at turning points such as accumulation, perhaps in this case, or distribution up near the highs. Now, Friday I said maybe, if you were a bottom fisher, that I probably wouldn't take this trade, but you might want to buy it above that level and put your stop below there. Had you taken that, maybe you made a few pennies or a break even, but the initial strength in the semis did fail, and then the market came back up to that level that was support early on in the morning. So tomorrow that's going to continue to be an important level, that 33.85 area, and more importantly, I think, is probably the 34 level, which is where that declining 5-day moving average is, as well as resistance on a couple occasions over the last few days. So jury's still out on the semis, but once again, the 50-day moving average is rising. So we'll continue to give it the benefit of the doubt, but with an eye on the exit just in case, because this group can lead things to the downside, and it's broken that trend line and still, closed just below that trend line. So it's a tough call in there. Again, from fast moves often come from failed moves, rather, like this breakout here, failed breakout, often come fast moves. So we're going to have to be very vigilant about what's going on with the semiconductor index, and you could take, this trend line, or whatever, however you want to draw the trend line. To me, I think the most important trend line right now is the first one that I drew in, which is right here. What we want to do is we want to see where we've hit that trend line on numerous occasions like we have here. And the trend line is drawn to capture the essence of the trend. And I think these higher lows do that, would capture the essence of the trend. I've also been saying that, basically about, well, I drew that wrong, so let's start over again with that. But 33 to 33 and a quarter, breaking below there, I think that's where we start to see more selling come into the market, and that's probably what could spill over to the rest of the market. Now, the Nasdaq 100, the QQQQ Trust, another great day for that market as its rally continues to get extended here on the upside, and not showing any signs of slowing down. We're up near these highs, closing in on the highs for the year. So the market continues to be strong. No reason, of course, to go out and short it. Friday, I was saying that I thought, getting back above 42.20 was really the level that would give me more confidence, and below 41.60 is what would get me concerned. We got back above there. Let's say now getting back below 42.10, 42.15 in that area, that would give me a little bit more reason for concern. But the market continues to act good, so no reason to rush out and sell. The mid caps, MDY, is what we look at here, the MidCap Spider Trust. And, more nice consolidation above a rising 10-day moving average. And we've seen the volume decreasing late last week. We had a nice day today, and the market increased slightly. The volume is rather increased slightly. This prior level of resistance perhaps is going to be support if it continues lower. So about 141 is where I would be a little bit more concerned, thinking that maybe we test that 200-day moving average again. I'm hoping that the market can stay stronger than, and we don't have another test of the 200-day moving average. But we've got the 10 above the 20, above the 50. They're all advancing. The weekly time frame continues to look strong in here. If we can get above this level this week, which is about 143 and a half or so, and close above it, I think that would even be a better sign. A couple weeks of consolidation here wouldn't hurt though. So all in all, the market continues to act strong. We've got the Federal Reserve, I guess, coming up on Wednesday. That could change things up. So I would be in a profit protection mode. And as always, be aware of when the companies are reporting earnings for the stocks that you're trading, because the risk can be extremely high, and you might get blindsided and see a gap down if you're long the wrong stock.